Hey guys, how's it going? My name is Hamish Hodder, and today I just want to talk about the biggest stock market bubble that I'm seeing in the markets right now. A very, very concerning area of the market that is causing a lot of people to start to funnel a lot of money into specific stocks. And I'm seeing some warning signs in that area that is really concerning. So I just wanted to talk about that with you guys for today. Of course, what I'm talking about here is these marijuana stocks in the US and Canada that have just been going up at 50, 100% in a couple of months. And I've had a lot of messages from people saying that they've had success in marijuana stocks and that they've seen crazy returns and that it's like nothing else in the stock market. Um, and really, I'm very concerned because the signs that we're seeing in the marijuana stocks in that sector of the industry, of the market actually, is very similar to a trend that we've seen time and time again in the markets. And these things are called bubbles. So, what a bubble means is that when there's certain stocks or one stock, or maybe it's the whole market, but it's usually either a specific sector of the market, such as tech or such as marijuana stocks or something like that, where the profits or the underlying fundamentals of the companies are good, but there's such hype around those stocks that people are throwing money at it and they're willing to pay any price regardless of the actual fundamentals of the business. And what happens is it's a bit of a snowball effect. So as heaps of people are funneling money, heaps and heaps of money into these stocks, they get pushed up because there's heaps of buyers and not many sellers. So the prices get pushed up. And then people see that these stocks are going up at 20, 30% in a day sometimes. And then they want to invest. And it's kind of this snowball effect of investors who are just throwing money at the stock and it just flies up and their fundamentals are down here, but their stock price has just gone through the roof. And eventually these bubbles pop. There's a top and then they fall off a cliff or they just go down over an extended period of time and they slowly return to their actual value because when people are throwing money at these stocks, they're all just speculating. They're all just hoping, ooh, it just went up 30% in a day. I can get in now and then I'll get the next 30% and then I'll sell out and make some money. And everyone's just trying to make quick money, easy money without actually looking at the businesses and what's actually in the fundamentals of the business. And it just ends horrifically for the majority of people trying to play this game. We've seen this so many times over the last few years. We've seen this a couple years ago with Bitcoin. Bitcoin exploded and everyone was saying, you've got to be in Bitcoin, you're going to miss out, everyone around you is going to be a millionaire. And I heard so many of my friends and people around me telling me, oh, you're an idiot for not being in cryptocurrencies. You're being stupid just sitting on the sideline. And I sat there and I said to them, I said, look, we've been through this before. The last time was when there was a mini one when there was hype around 3D printers and the 3D printers back in 2013 to 2015-ish, I think, around that time. And a few of those stocks exploded and then crashed, of course, because no one's buying 3D printers of it. The demand for them wasn't as high as people thought. Before that, what was it? Well, even real estate was a bubble. In 2008, that was a bubble, but that was a little bit different. That's not the exact same as bubbles that occur within the stock market. But before that, there was the tech bubble. That was a humongous bubble that went and overflowed into the rest of the market and absolutely destroyed the market in 2000. And I'd looked over history, I learned about Bitcoin and I was interested and I saw what has happened in the past and I saw what was happening with Bitcoin. People were getting in Bitcoin because it was going up. And because it was going up, more people were getting into Bitcoin. And it's just this flow-on effect of people buying more and more and more and bidding up the prices of these cryptocurrencies to the point where there was a cryptocurrency that was Dogecoin. It was literally a joke about that meme, that Doge meme. I'm pretty sure that had a market cap of over $50 billion. So people were throwing billions of dollars at complete garbage. And it's happened time and time again in history. And it's happening again in the marijuana sector. Let's take Tilray, for example. It's one of the leaders in the marijuana sector. Over the past year, up until 3 days ago, you would have been up 900%. 900% in a year when the stock market has done, what, 14%, 15%, something in that range. That is insane, and it's not a sustainable level of growth. And okay, maybe this company's fundamentals are awesome. Maybe their fundamentals are growing at 900%. Maybe it's completely justified. So let's go and have a look at Tilray's fundamentals. All right, so Tilray, we've got 2 years of data, 2016 and 2017. In 2016, they did 13 million in revenue. 2017, they did 21 million. 21 million. Now you might think, whoa, 21 million, that's a lot. Their price right now, their price at the peak 3 days ago was over $20 billion. $20 billion for a company that is bringing in revenue of 20 million. That's a price to sales ratio of 1,000. A price to sales of 1,000. That is just ridiculous. That is insane. The company that I have the most of my money in, Thor Industries, has a price to sales of 0.5. Their sales are twice as much as the price of their business. When you've got companies like Tilray producing $20 million in an entire year and they're worth 20 billion. It's just terrible to see that people are putting money in stocks like this. I feel terrible for people who are making the mistake in investing in companies like this. And the reason I'm talking about Tilray, and I kept saying up until 3 days ago, is because 3 days ago, the stock tanked over 50% in 3 days. So a company had what? $12 billion wiped off its value in 3 days. $12 billion. And the thing that just blows me away is that every single time one of these stupid bubbles happens, there's people out there that are invested in these things and they'll say, yeah, but you don't understand it. You don't get it. You don't get Bitcoin. It's the future. Everyone's going to be using Bitcoin. You don't get the internet. Everyone's going to be using the internet. It's going to be huge. You just don't understand it. I understand it. I know what it's about. I know what I'm investing in. And it doesn't matter. It doesn't matter how big the internet was going to get from 2000 until now and into the next 50 years. Yes, the internet is bigger than it was back then, but that doesn't excuse the fact that these stocks were incredibly overpriced. The price matters. It's not just what's happening in the business. It doesn't matter if marijuana is going to be a huge, $200 billion industry in the next 10 years. Maybe it will be. It doesn't matter. Tilray is still only doing $20 million in revenue. It's tiny. The market is tiny, and you can't pay a price here for a company that's doing this just because you're hoping that one day they'll be up there with the price. That is so far away, and that is so far-fetched. It is incredible. So please, for the love of God, if you're going to be investing in a stock that doesn't have any earnings or has very, very little earnings compared to its price, and basically the only reason you're investing in it is for the hope that someday it's going to be a massive giant in a market that doesn't even exist yet, but will be bigger one day maybe, please only invest small amounts of money in these companies. Do not invest significant amounts of money. It doesn't matter. Don't fall into the psychological traps where you put 5% of your portfolio in it and it goes up 20% in a day, so then you put another 50% of your portfolio in it. Don't do it. There's no reason for you to do that. It doesn't make any sense what you're doing if you're going to invest like that. And if you're going to invest in these companies, know that 99% chance says that you're going to be wrong and you're going to get zero. Don't invest in these companies like you know that you're going to make some money, or the downside is that you'll break even, because in all likelihood, companies like Tilray are going to fall dramatically until they can produce earnings that are anywhere near their current price. For example, Tilray had a market cap of over $20 billion. There's massive companies in the US that are doing $1, $2, $5 billion in profits, in revenues either, and they might not even have a market cap of $20 billion. If this company's doing revenue of $20 million, you could easily see that price come from 20 billion all the way back down to 100 million, 50 million, maybe even less if their growth prospects go away and they're not going to be growing at a massive rate. Even if Tilray's market cap went down to 500 million, which I would still say is way too high for a company that's doing 20 million in revenue, That's a 97% drop in the stock price. 97%. And you can't sit out there and say that that hasn't happened before. Yahoo had no earnings in 2000. They had a market cap of 150 billion, and then like that, they lost 98% of their value and disappeared. And then Google came along and was the actual leader in that industry. So don't think that you're smart enough to figure out who's going to be the industry leader before the industry even exists, because you're just not, and no one is. People get lucky and get it right, fine. But the vast majority get burned. And don't be one of those people. Wait until the business has a proven track record, until there's some sort of fundamental value there that's been proven over a 5 or 10 year period, or even longer. Like my biggest investment has a track record of 35 years of double digit growth. That is a long track record. Wait for the track record, see that it's a proven business model, and invest when it's cheap. Don't try and be the prophet and try and predict the next Google, or the next Amazon, or the next Apple. You don't need to do that to be successful. And if you do that, in fact, you're most likely going to lose all your money, and you're going to be put off from the stock market. And then you're not going to be investing. Your wealth isn't going to be compounding over your lifetime, and you're going to be significantly disadvantaged than against someone else who just passively or safely invested their money over their entire life. People like Warren Buffett don't invest in bubble industries. Do not do it, please. Also, subscribe if you enjoyed. Thanks for watching.